audit, where the audit is not compulsory. It can still be the same person, but often it's not the same person. Sometimes it's the same team, but often it could even be different teams doing the work. But the problem that now arises is, who is the compiler, or until what stage does the compiler take the work, and when does the reviewer / auditor take over? To try to explain that, I've put together a slide that goes through the system of the processing of receivables. And if we can visualize how a transaction is recorded from the point where it is captured in the system in the first place, all the way through to where it's reported on by the auditor or the reviewer, if applicable, then I will try and explain to you the process as it normally happens, and then we can try and distinguish between where does the compiler go and where do the review or audit, where does the review or audit start. So first of all, the processing starts. This is done by typically an accountant or a bookkeeper. The source document would be receipts or GRNs or whatever the source document is, invoices, whatever, but be it as it may, they would capture the invoices in, call it a pastel package or whatever. They will capture it, and that is the beginning of the accounting records. The output of this process is the general ledger. She will print out the general ledger, or maybe they don't print out the general ledger, but at this stage we are sitting with the general ledger. The next stage in the process is towards the end of the reporting period. It may be the end of the month or generally the end of the year. Some closing entries are put through. So someone puts through, maybe raises some accruals, maybe reallocates some, maybe writes off some bad debts or makes a provision at least, considers all of these adjustments, etc., maybe interest or whatever the case may be. So they put through closing entries, and the output of that process is your final trial balance. The final trial balance is then what is used for the next stage. The next stage is the compilation of the financial statements. What happens there is, typically most of you use Caseware, so you would import it into Caseware and you would map it. Once you've imported and mapped it, you've got a set of draft financial statements. That's the output of that part of the process. It could be the same person doing all of these, or it could be 3 different people, or it could be a whole range of people doing this, but this is the order in which things generally happen. Then someone takes those draft financial statements and compiles them. What does compilation mean? It is compiled once it complies with the prescribed framework. So if the framework is IFRS, then it is compiled once it complies with IFRS. Framework is IFRS for SMEs, or the framework is GRAP. It is compiled once it gets to that point where it complies with the framework, if the framework is prescribed, of course. So the compilation process is a process of selecting accounting policies. If you use Caseware, you just switch them on and you tailor them for your needs. You would switch on certain notes. You would probably add some narratives. You would switch on some disclosures, or you will add some disclosures. You will talk about related parties and subsequent events and the good old IFRS 7 disclosure and all of those things. But basically that is the process of turning a set of draft financial statements into an actual set of annual financial statements that complies with the framework. Once again, in practice, you'll find that sometimes these last 2 steps are combined in one. But let's, for the purpose of our exercise, split them up, because chronologically that is how they should happen. And once you've got a set of financial statements, they are ready to be presented to the auditor for audit, or to the reviewer for review. Maybe they are exempt, then they do not get audited or reviewed, and in that case the process stops here. Then there is only a compilation, and the financial statements are compiled and the financial statements are issued simply with the compilation report. But if an audit or a review is required, then this is the level that it goes to, audit or review. And that issues a set of annual financial statements that now complies with the requirements of the Companies Act. Section 30 of the Companies Act defines what should be in your annual financial statements. And Section 29 as well. I'll talk about Section 29 in a minute. So that is the process of receivables processing, starting from the initial capturing all the way through to where it is actually presented in a set of annual financial statements. Different people take responsibility for different stages of this process, and if you can imagine that there are 5 different people involved, then I think each of these people has their own controls for the process. For example, the person who would capture the invoices needs to have a control in place for themselves just to make sure that all invoices are captured. Maybe they keep a list, maybe they keep a running total, maybe they keep hash totals, control totals, numeric controls, whatever. There must be some sort of control in place, because that person, once they hand it over to the next person, must take responsibility for ensuring that all invoices are captured. Very important. That's the first stage of the process. The person who draws up the trial balance, the person who puts through the closing entries, here's an example of one of the questions that they might ask as a quality control for themselves. So they could ask, are there any of these invoices that should be deferred to the next period, or in fact are there any invoices that were invoiced next period that should have been invoiced this period? So is the cutoff right? Is the timing of the recognition correct? That's the sort of questions that that person will ask to make sure that their outputs, that the trial balance is a reliable piece of information to move on to the next stage. The next person who does the mapping or the importing, whatever, who produces the set of draft financial statements, simply has to worry about, is the mapping correct? Well, not simply, there's a couple of other questions as well, and that is maybe not as simple as it sounds. But that person will ask, is the mapping correct? Is it consistent? Is it appropriate for this type of business to map to those areas? Because if you don't map it correctly, then it's going to end up in the wrong place. So each person takes responsibility for their own step. Next, the compiler. The compiler looks at it, and the compiler would, one of the questions that they would ask is, well, we've now got the sales captured, credits are right, we've got the debtors captured, debits are right, but is the disclosure correct in accordance with the identified framework, be it IFRS or IFRS for SMEs? For example, both IFRS and IFRS for SMEs require related parties to be identified. Is that disclosure correct in this context? So that's the type of question that a compiler would ask. Obviously, the compiler would be concerned about all the questions before his step as well, because he signs off for the compilation. He needs to make sure that the compilation is based on correct mapping, all the accruals, deferrals should be there, everything should be captured. So obviously, each person takes responsibility for the steps going before them as well. And then lastly, if an audit or review is appropriate, then maybe the auditor or the reviewer would ask, are debtors recoverable? The auditor will express an opinion saying that the debtors are fairly stated. The reviewer will express what we call negative assurance, saying that nothing has come to their attention, that debtors are not fairly stated. But the point is that they both ask the question about recoverability. They might issue a different level of assurance, but they both ask the question. So I think from my slide here, it is probably quite clear how things happen in practice. You can see that compilation goes up to that stage where that last arrow is, and audit or review starts after that stage. Is it as simple as that? I'm afraid it's not as simple as that. So I will show you now what happens in practice. In practice, we've got two problems. The one problem is Section 29.6. Section 29.6, if you want to look it up in your Companies Act, basically says the following. Section 29.6 says that subject to Section 2142 of the Companies Act, it's a different section, I'm not going to refer to that now, subject to that section, a person is guilty of an offence if the person is a party to the preparation, approval, dissemination or publication of annual financial statements, knowing that the financial statements fail in a material way to comply with the requirements are materially false or misleading. So read the red printed part there, guilty of an offence, which means you're guilty of a criminal offence if you are a party to any of the steps in the process that I detailed in my slide before. If you are a party to any of the steps detailed in the previous slide, you are guilty of a criminal offence if those financial statements are false, misleading, or fail to comply with requirements. So that is the first practical problem relating to this whole process that I showed you in the previous slides. The first practical problem is that everyone takes responsibility for this set of financial statements. The second practical problem is that in practice, it really looks like my previous slide. In practice, it looks more like this. In practice, unfortunately, things appear more like this picture. Not quite as organized as the first slide that I showed you, where things follow in an orderly sequence. In practice, what normally happens is that all of these things happen together. Who hasn't found that you are busy with the audit or review while there is still some processing taking place? Or you think that you are preparing the financial statements while some late closing entries come in? Or a new account is added which changes your mapping. So So in practice you will find that the processing sort of starts before the rest of the process and the auditing ends after the rest of the process. But in between things happen in quite a confused, disorganized manner. A whole lot of things happen at the same time, and it all in the end ends up with a set of annual financial statements. Somehow we end up with a set of financial statements that's been compiled and audited/reviewed. So we're sitting with two problems here, and one is that everyone is accepting responsibility. You can actually, as you saw in the previous slide, you can actually incur criminal liability if you are party of this whole process. That's the first problem. And the second problem is that the process is unfortunately not so well organized as one would be led to believe. So how do we deal with this? To deal with this, let's go back to my previous slide. And it is still a fact that every person should take responsibility for their own work. But what we have got in the probe template now is that we have two separate templates. One is, in fact, three separate templates. That one that I'm showing you on the screen now actually consists of two. It's probe MMX for audits, and there's probe MMX for reviews. So you use that template for that part of the process. And then there is another template, the compilation template, that we are using for this part of the process. Now bear in mind what I just said, that it's not necessarily in chronological order. So it doesn't mean that you're necessarily going to complete the compilation template and then switch over to the probe MMX audit or review template and complete the rest of the work. It may happen that you actually start both at the same time. It may happen that the compiler doesn't use the compilation template, but the auditor/reviewer uses it for his audit or his review. And in that case, it is quite likely that the auditor or reviewer would go back and use some of the sections of the compilation template to ensure that assurance was obtained in that section up to the compilation stage. So the process still makes sense, although in practice it is really, as I said, such a neat picture as you can see there in front of you. The process makes sense, and that is why we have developed those two templates to sit in the same chart of accounts, or in the same document manager, if I can call it that. That means that they can live together. You can have compilations plus audit or compilations plus review. You can work separately. It doesn't have to be in the same file. They can be in separate files, but if they are in the same file, it helps a lot because they use the same general ledger, trial balance, draft financial statements, mapping. Everything else is together. So that means that all of those common areas are utilized, and that way you can make sure that you perform the most effective and efficient engagement. That is the difference between the compilations and the audit or review template, and that's how the two templates fit in together. If you can try to picture this in your mind, and not only for the receivables but for all the cycles, you can do it for purchases, for fixed assets, for capital, for whatever. If you can picture this schedule, it will help you to organize things, but bear in mind that it's not always as simple as this.